In this video, we'll show you $3 trillion stocks that could be significantly better investments than SpaceX right now. When investors think about SpaceX, it's easy to get caught up in the excitement. The company has become one of the most talked about businesses on the planet. Its valuation has soared toward the $3 trillion mark, and many investors believe it could become one of the most valuable companies in history. The reality is that SpaceX generated less than $19 billion in revenue last year. In the most recent quarter, revenue growth was approximately 15%. Yet despite those numbers, the company commands a valuation approaching some of the largest and most successful businesses ever created. Part of that valuation is being supported by a low float, which limits the available shares and can amplify price movements. Another factor is investor optimism around future opportunities. Elon Musk has predicted that SpaceX could eventually generate $1 trillion in annual revenue by 2030. The challenge is that there are still enormous technical and commercial hurdles standing between today's business and that vision. Whether it's space-based infrastructure, AI-related ambitions, or future data center opportunities beyond Earth, nobody can say with certainty that those businesses will succeed. And even if they do, they would likely require extraordinary capital expenditures to build and maintain. That brings us to our first stock, NVIDIA, ticker symbol NVDA. NVIDIA has become the backbone of the artificial intelligence revolution. Every major AI breakthrough, every advanced language model, and nearly every cutting-edge AI application relies on the type of computing power NVIDIA provides. What makes NVIDIA so fascinating is that its dominance isn't just based on having powerful chips. Many companies can build chips. The real advantage comes from the ecosystem NVIDIA has spent decades building around those chips. At the center of that ecosystem is CUDA. CUDA has become the standard software platform used by developers and researchers to train advanced AI models. Over the years, countless AI applications have been built using NVIDIA's tools. That creates a powerful network effect. The more developers who build on CUDA, the more valuable NVIDIA's platform becomes. And the more valuable the platform becomes, the harder it is for competitors to convince customers to switch. This is exactly what investors should look for when evaluating long-term winners. Not just a good product, not just a temporary lead, a competitive moat that becomes stronger over time, and NVIDIA's moat continues expanding. While most investors focus exclusively on GPUs, NVIDIA has quietly built a world-class networking business that helps connect the massive AI systems powering today's most advanced models. The company is also positioning itself to benefit from AI inference. Training an AI model is only part of the opportunity. Once a model is trained, it must continuously answer questions, generate responses, and perform tasks. That process is known as inference. As AI adoption expands globally, inference workloads could become one of the largest technology opportunities of the decade. NVIDIA's partnership initiatives and expanding product portfolio position it well to capture that growth. The company is also making significant moves into agentic AI. Many experts believe the next phase of artificial intelligence will involve AI agents that can complete tasks, make decisions, and perform complex workflows with limited human intervention. If that future develops as many expect, demand for advanced computing infrastructure could increase dramatically, and NVIDIA sits right at the center of that trend. But let's talk about the numbers, because this is where the comparison becomes almost shocking. In its most recent quarter, NVIDIA generated revenue of approximately $81.6 billion. That's an 85% increase compared to the prior year. Think about that for a moment. A company already valued in the trillions is still growing revenue at a rate that many smaller technology firms would envy. Even more impressive was profitability. Adjusted quarterly profits reached approximately $45.5 billion. That's not annual profit, that's quarterly profit. In a single quarter, NVIDIA generated profits that were roughly 2.5 times larger than SpaceX's entire 2025 annual revenue. Those numbers highlight an important investing lesson. Scale matters, execution matters, proven demand matters. When investors compare NVIDIA and SpaceX, they're often comparing a company that dominates one of the fastest-growing industries in the world against a company whose future success depends heavily on outcomes that remain uncertain. That doesn't mean SpaceX cannot succeed. It simply means NVIDIA offers something many investors should value more highly: predictability. When businesses become deeply embedded in the infrastructure of an industry, their revenue streams become much easier to forecast, and artificial intelligence is rapidly becoming essential infrastructure. Companies around the world are investing billions of dollars to integrate AI into products, services, operations, healthcare, finance, manufacturing, and countless other industries. As long as that trend continues, NVIDIA remains one of the primary beneficiaries. Now let's discuss valuation. One reason some investors hesitate to buy NVIDIA is because they assume the stock must be expensive. After all, it's one of the largest companies in the world. But surprisingly, Nvidia currently trades at a forward price-to-earnings ratio of roughly 16. For a company growing revenue at 85%, maintaining extraordinary profit margins, and leading one of the most important technological shifts in history, that valuation is remarkably reasonable. In fact, one could argue that the market is still underestimating how large the AI opportunity could become over the next decade. If artificial intelligence truly transforms global productivity, the companies providing the foundational infrastructure stand to benefit enormously, and Nvidia remains the clear leader in that category. The company isn't chasing moonshot ideas, it isn't relying on speculative projections, it isn't asking investors to imagine what might happen someday. It is already delivering massive revenue, massive profits, massive growth, and perhaps most importantly, a durable competitive advantage that becomes stronger as AI adoption expands. That combination is incredibly rare. For investors seeking trillion-dollar businesses with both growth and proven execution, Nvidia stands out as one of the strongest opportunities available today. And compared to a company whose valuation depends heavily on future possibilities, Nvidia offers something far more valuable: evidence. The numbers are already there, the demand is already there, the profits are already there, and the AI revolution may still be in its early innings. That is why Nvidia earns the #1 spot on our list of stocks that look like better buys than SpaceX. If this resonates with you, you're exactly who this channel is for. Please, hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move on to the second stock on our list. Apple, ticker symbol AAPL. Now, whenever Apple comes up in investing discussions, there is always a group of investors who immediately point to the same criticism. They say Apple is no longer the innovative company it was during the Steve Jobs era. They argue that the company is not producing revolutionary products at the same pace it once did, and to be fair, there is some truth to that observation. The Apple of today looks very different from the Apple that introduced the iPhone and transformed the smartphone industry. But here's the question investors should really be asking: does a company need to constantly reinvent the world if it already owns one of the most profitable business models ever created? The answer is no. In fact, many of the greatest investments in history came from companies that mastered execution rather than constant disruption, and that's exactly what Apple has done. What makes Apple special is not simply the products it sells, it's the ecosystem it has built around those products. Most technology companies sell devices. Apple sells an experience. Every product is designed to work seamlessly with every other product. The iPhone connects effortlessly with the iPad. The iPad works naturally with the Mac. The Mac integrates smoothly with Apple Watch. Photos sync automatically. Messages appear everywhere. Subscriptions work across devices. Purchases follow users throughout the ecosystem. The result is something incredibly powerful: convenience. And convenience is one of the strongest competitive advantages in business. Once customers become accustomed to that experience, leaving becomes increasingly difficult. Every photo stored in the ecosystem, every app purchased, every subscription activated, every accessory connected, all of it increases switching costs. That's why Apple's moat is so durable. The company isn't forcing people to stay. Customers choose to stay because leaving creates friction, and friction is the enemy of consumer behavior. This ecosystem strategy has allowed Apple to accomplish something remarkable. It transformed consumer electronics into a luxury brand. Think about that for a moment. Most electronics become commodities over time. Competition drives prices lower. Margins shrink. Brands lose relevance. Yet Apple managed to position its products at the premium end of the market year after year. Customers willingly pay more because they perceive higher value. That pricing power is incredibly important for investors. When inflation rises, Apple can often raise prices. When economic conditions become challenging, its customer base tends to remain loyal. When competitors attempt to undercut pricing, Apple frequently maintains strong margins. That is the hallmark of a premium brand, and premium brands tend to be extremely valuable over long periods. But the ecosystem advantage extends even further. One of the most attractive aspects of Apple's business is the predictability it creates. Unlike many industries where customer demand can fluctuate dramatically, Apple benefits from relatively predictable replacement cycles. People upgrade smartphones. They replace laptops. They buy new tablets. They purchase accessories. These purchasing behaviors occur repeatedly over time. That recurring cycle generates a steady stream of hardware revenue. For investors, predictability reduces uncertainty, and reduced uncertainty often deserves a premium valuation. Compare that to SpaceX. SpaceX's future valuation depends heavily on projects that may or may not succeed. Apple's future, on the other hand, is supported by hundreds of millions of customers already integrated into its ecosystem. One business relies on possibilities, The other relies on habits, and habits are often easier to forecast than possibilities. This is one reason Apple has remained one of the most valuable companies in the world for so long. Its success is not dependent on one product launch. It's not dependent on one breakthrough technology. It's not dependent on one future prediction. Its success is supported by an ecosystem that has been strengthened over decades, and ecosystems are incredibly difficult to replicate. Imagine trying to convince an Apple user to switch completely. They may need to move thousands of photos, repurchase apps, learn a new operating system, transfer subscriptions, replace accessories, adjust workflows. Most people simply don't want the hassle. That's exactly why Apple's customer retention remains so powerful. The company has created a system where customer loyalty becomes self-reinforcing. The longer customers stay, the harder it becomes to leave. And the harder it becomes to leave, the more valuable each customer becomes. This creates another important advantage: cash flow. Because Apple doesn't need to spend enormous amounts of money convincing existing customers to remain within the ecosystem. Its products and services naturally encourage retention. That allows management to focus on improving products, expanding services, and returning capital to shareholders. And that's another reason Apple deserves attention from long-term investors. Great businesses are not always the ones making the most headlines. Sometimes the greatest businesses are the ones quietly generating profits year after year while competitors struggle to keep up. Apple has demonstrated exactly that. For decades, investors have repeatedly questioned whether growth would slow, whether competition would catch up, whether customer loyalty would weaken, yet the company continues to prove its resilience. The reason comes back to the moat. Strong brands can be copied, individual products can be copied, features can be copied, but entire ecosystems are much harder to replicate. Apple's ecosystem combines hardware, software, services, subscriptions, customer behavior, brand loyalty, and switching costs into one integrated machine. That machine continues generating value year after year. And when evaluating trillion-dollar investments, that's exactly the type of characteristic investors should prioritize. Not excitement, not hype, not speculation, durability. Because investing is ultimately about ownership, and when you buy a stock, you're becoming a partial owner of a business. The question every investor should ask is simple: would you rather own a business whose future depends on overcoming major technological and commercial uncertainties? Or would you rather own a business that has already spent decades proving the strength of its business model? For many investors, the answer is obvious. Apple may not generate the same headlines as SpaceX. It may not sound as futuristic. It may not inspire the same level of excitement. But investing success is rarely determined by excitement. It is often determined by consistency. And few companies in history have demonstrated consistency as effectively as Apple. That's why Apple earns a place on this list of trillion-dollar stocks that may be better buys than SpaceX today. So let's quickly recap. NVIDIA dominates the infrastructure powering the artificial intelligence revolution and continues delivering extraordinary growth and profitability. Apple controls one of the most powerful consumer ecosystems ever created, generating predictable demand and remarkable customer loyalty. Amazon combines leadership in e-commerce, cloud computing, artificial intelligence, logistics, and emerging communications opportunities into one incredibly powerful business. All three companies possess durable competitive advantages, all three generate enormous value today, and all three have proven business models that investors can evaluate using real-world results rather than speculative projections. That is why these $3 trillion stocks stand out as compelling alternatives to SpaceX right now. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move on to the third and final stock on our list, and this one might be the most interesting comparison to SpaceX of all. That company is Amazon, ticker symbol AMZN. When most people hear the name Amazon, they immediately think of online shopping. They think of packages arriving at their front door. They think of fast delivery and endless product selection. But focusing only on e-commerce is like looking at an iceberg and only seeing the tip above the water. The real story is much bigger. Amazon has quietly built one of the most powerful business ecosystems in the world. And unlike SpaceX, which is still trying to prove the long-term economics of several ambitious future opportunities, Amazon already operates multiple businesses that generate enormous revenue and cash flow today. Let's start with what may be Amazon's most valuable asset: Amazon Web Services, also known as AWS. Many people use Amazon every week without realizing that AWS is probably affecting their lives every day. Thousands of businesses rely on AWS infrastructure to run websites, applications, databases, software platforms, and increasingly, artificial intelligence workloads. In many ways, AWS became the foundation of the modern internet. Instead of spending massive amounts of money building and maintaining their own computing infrastructure, companies can rent computing resources through AWS. This model transformed technology, and it created one of the most profitable businesses ever built. What's particularly exciting right now is that AWS is seeing accelerating growth, and a major reason for that acceleration is artificial intelligence. Companies around the world are racing to build AI capabilities. That requires enormous computing power. It requires storage. It requires networking. It requires cloud infrastructure, and AWS is positioned directly in the center of that demand. This creates a powerful growth engine for Amazon. As AI adoption expands, AWS benefits. As cloud spending grows, AWS benefits. As businesses modernize their technology infrastructure, AWS benefits. Few companies are positioned to capitalize on as many long-term trends simultaneously. But Amazon isn't stopping there. One area that many investors underestimate is the company's custom chip business. For years, technology companies depended heavily on third-party hardware providers. Amazon took a different approach. The company invested in developing its own chips designed specifically for cloud workloads and AI applications. Why is this important? Because custom chips can significantly reduce costs while improving performance. In cloud computing, even small efficiency gains can translate into billions of dollars in long-term value. That gives Amazon an advantage that many competitors simply don't have. The company is not only providing cloud services, it is optimizing the infrastructure behind those services. And in industries where scale matters, efficiency becomes a powerful competitive weapon. Now let's talk about something that makes the comparison with SpaceX especially fascinating: space. Many investors assume that SpaceX has a clear path toward dominating space-based communications and satellite internet. But Amazon has no intention of sitting on the sidelines. The company has its own space ambitions and is actively working to challenge SpaceX in satellite connectivity. This is a critical point that many investors overlook. When people invest in SpaceX, part of the investment thesis revolves around future opportunities in communications infrastructure and connectivity. Amazon is pursuing opportunities in those same markets. But unlike SpaceX, Amazon has the financial resources generated by multiple successful businesses to support those efforts. In other words, Amazon is pursuing future opportunities from a position of strength. It is not relying on those opportunities to justify its valuation. That distinction matters. One of the biggest investing mistakes people make is assuming future possibilities deserve the same valuation treatment as proven business models. They don't. Future opportunities are valuable, but proven execution is usually more valuable, and Amazon has spent decades proving its ability to execute. Think about the company's track record. It transformed retail, it built a cloud computing giant, it created one of the world's most sophisticated logistics networks, it expanded into advertising, it became a major player in digital services, and now it is aggressively positioning itself within artificial intelligence. That's not luck, that's a pattern, and patterns matter. When management repeatedly demonstrates the ability to identify opportunities, invest intelligently, and create value, investors should pay attention, because future success often leaves clues in past performance. Another important development involves Amazon's strategic efforts to strengthen its communications capabilities. The company has secured valuable spectrum assets and direct-to-device capabilities that could become increasingly important as connectivity technologies evolve. That may not grab headlines today, but long-term investors understand that infrastructure assets often become more valuable over time, especially when demand continues growing. And that's one of the recurring themes throughout this entire video. The best investments are often businesses that control critical infrastructure. NVIDIA controls AI infrastructure. Apple controls a powerful consumer ecosystem. Amazon controls cloud infrastructure, logistics infrastructure, and increasingly participates in communications infrastructure. Infrastructure businesses tend to enjoy durable competitive advantages because they become deeply embedded within customer workflows. Replacing them becomes difficult. And difficult to replace businesses often become very valuable businesses. Let's also consider risk. Every investment involves uncertainty, but not all risks are equal. SpaceX faces significant execution risk. Many of its most ambitious opportunities require technologies, adoption patterns, and economic outcomes that remain uncertain. Amazon certainly faces challenges too. Every large company does, but its challenges exist within businesses that are already operating successfully at scale. That's a major difference. One company is proving itself today. The other is asking investors to project far into the future. For long-term investors, that distinction can be incredibly important, because successful investing is not just about identifying opportunities, it's also about managing risk, and proven business models generally carry less uncertainty than unproven ones. That's why Amazon stands out as such a compelling alternative. Investors gain exposure to e-commerce, cloud computing, artificial intelligence, logistics, digital advertising, communications infrastructure, and future innovation opportunities, all within a single company. Very few businesses offer that level of diversification while maintaining strong competitive advantages across multiple industries, and that's ultimately why Amazon deserves a place among the trillion-dollar stocks that may be better buys than SpaceX. You are not betting on a single future outcome. You are investing in a collection of powerful businesses that continue generating value today while building opportunities for tomorrow. That combination is incredibly difficult to find, and when it exists, it often creates tremendous long-term shareholder value. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Which company do you think has the strongest long-term competitive advantage? NVIDIA's AI infrastructure moat, Apple's ecosystem lock-in, or Amazon's combination of cloud computing, logistics, and AI leadership? Let me know your thoughts in the comments below. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.